Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets for Monday's trading session, the 15th of February 2016. Be sure to visit CFDs.com for your trading needs and certainly apply for that potential generous cash opening offer or bonus offer. Alternatively, you can visit the educational site www.cfds.education to certainly learn more. Okay, so let's try and decipher exactly what's happening here with regards to European indices and which way we are more than likely or inclined to open. Okay, in terms of the data deluge, and when I refer to data deluge, I'm referring to China. Although Friday certainly was interesting as well. Okay, but the economic data overnight from the US is going to be very important. Although the retail sales from America certainly helped shift sentiment higher, certainly negated the weakness in Asia to a large extent. So let's start with the Asian time zone first of all, because I do think that's quite important, and obviously that will dictate the next direction of this market, or basically will shift violently overnight. That's usually what tends to be the common occurrence now in this current market environment. So let's see exactly where the Asian markets are positioned. Now, first of all, remember the Hang Seng was down quite substantially last week, along with the Nikkei as well. Now let's bring up the chart of the Nikkei first of all, because as we all know, the negative rate story certainly isn't boding well for the Japanese economy. Now, one important aspect here is that the 200 MA is now coming into the equation at the weekly 200 MA. Also, we have gap fill below as well on the Japanese Nikkei. Now, one of the most surprising factors in terms of the Japanese market, in terms of the index itself. Also, we have the topics as well, which I'm not going to disclose here, but I was very surprised at the fact that we broke below this gap fill support here, even with that bottoming tail that we obviously got on the. We just confirmed that was on the 10th. And the following day, we flushed even lower. Now, even with negative rates, the Japanese index has failed to put in a potential pivot low. Now, we can certainly attribute that to the banking crisis in Europe and obviously the ongoing concerns in China. Although retail sales over the weekend certainly came in stronger than expected, and obviously with US markets shrugging off the weak Asian markets, that will obviously be potentially positive. Now, we'll bring the yen into the equation here as well. Now, I hate to rabbit on about the Asian markets, but it's very, very important, folks. The reason why these markets have been so volatile and gyrating so violently and wildly is due to Asian markets to a large extent. And obviously that's emanated from potentially the commodity sector and the liquidations now in the commodity sector. And obviously the bad debt has to be shifted elsewhere, and obviously that, I mean, it's not the sole reason, but it is one of the reasons why we are seeing this banking crisis, because equity markets have been hit, valuations have been hit, and obviously then everything has to be written down, and obviously once that occurs, it's like a downward spiral. It's a vicious, what do they call it, the negative feed loop, if I can recollect correctly. So with regards to the Japanese Nikkei, we certainly have the next potential level of support of 14,500 with regards to the Japanese Nikkei. So that really is a concern to a large extent. Now, with regards to the Japanese Nikkei, let me get a price feed on the Japanese Nikkei. Where did the Japanese Nikkei close on the Friday? Let me just quickly get my price feed. I'm referring to the futures here because the US market certainly finished positive, and that certainly helped the USD JPY as well. That's quite an important factor here. USD JPY certainly reclaimed that 113 handle. So the Japanese Nikkei closed at the 15,400 level. Okay, interesting. Okay, so we've certainly pushed higher. Okay, given the fact that we finished at the 14,950 level, we're up by almost 500 points, or 400 points. So let's just try and now bear in mind you have gap fill at 14,500. Now, if we do push higher, and then you are looking at potential resistance at the 15,710 zone. Okay, although you have that bottoming tail as resistance as well, so that's exactly at 15,500, which the Nikkei is currently sitting at. So based on that information, then you are looking at the classical concept of previous support equals resistance at that bottoming tail, which is 15,400, and therefore you are looking at potentially seeing resistance on the Nikkei. Okay, now we'll quickly go towards the yen, okay, because the yen is very, very important here. If I can just bring up the FXCM yen, okay. Now the yen chart on the daily basis, if you look at it, you are looking at a potential topping tail, a topping tail doji, and therefore you are looking at a potential reversal, okay, on the actual Nikkei itself. One of the concerns is that it has made a new high, but it has been rejected as well. Now you are looking at gap fill support below as though certainly take that into consideration, and then obviously you have further gap fill support below as well. Now, with regards to the yen, as we all know, the yen CHF certainly is a safe haven currency now, along with the euro, given the anti-QE nature. Obviously, given the fact that we are looking at risk on and risk off. When we go into risk off, then the euro starts to appreciate, which is a common theme now. Okay, hence the reason why you have seen the European equities sell off quite substantially. If you map a chart of the euro versus, say, for example, the euro stocks, and you'll see there's an inverse correlation. Why? Because the euro is going higher and the euro stocks is going lower. One, obviously, the export factor certainly revives growth and jobs, etc., and obviously international trade certainly benefits. But the other factor is that the euro has become a safe haven currency because of the anti-QE nature. Along with the yuan now as well, the yuan certainly is a safe haven currency, or it's become a risk barometer because the Chinese are obviously attempting to devalue their currency. And it's a zero-sum game, so again, that's certainly something to consider as well. Okay, so when the Chinese certainly devalue their currency, then given the fact that it's a zero-sum game, somebody has to lose in terms of international trade, and European and obviously Asian markets, should we say Japan and US, certainly suffer to a large extent. Hence the reason why you'll see that the Chinese markets certainly get hit as well. Okay, so again, it's interesting. It's an interesting cycle of events, and it certainly is shifting all the time. It's certainly changed from the old method of the inverse dollar trade, i.e. QE1, QE2, QE3 in the US. Whenever the dollar fell, the stock markets rallied, and vice versa. Same that's happened with regards to the yen. The yen falls, Japanese equity markets rally, and global markets rally en masse, along with same with the euro as well. So again, these are all things that we need to take into consideration as traders. It's not just about looking at an index or a chart. It's certainly taking into account the macro, micro, and obviously global intermarket and intermarket relationships. Okay, so it's very important to cross-reference your trades at all times. Okay, so the yen itself, potential topping. Now, given the fact that the yen is topping out, there's also another chart that I'd like to share is the renminbi, okay, which is obviously the yuan, and it certainly measures that as well. And you are looking at a potential topping out of the yuan. So this is something to consider, okay? Something certainly worth considering. Chinese renminbi potential top out. Now, that certainly isn't a bullish sign, okay? For global markets, it means that the attempt at talking the currency back up or stabilizing the currency and preventing it from falling has certainly subsided, okay? And therefore, you are looking at the renminbi potentially falling again. Okay, and therefore you are looking at more carnage in the economic markets or the global indices. Okay, so that certainly is very, very important to factor in. Okay, so yes, bear that in mind. Chinese renminbi potential top versus the dollar, and that obviously we already know the concerns regarding the Chinese devaluation certainly sent the market spiraling into a sell-off mode. So again, certainly more food for thought. Okay, so now taking into account the potential yen, whether or not that will obviously make a new high or make a new low, that certainly is something to consider as well. Also with regards to the renminbi, which I've explained to you as well. Also with regards to the USD JPY, whilst we're here, I mean, again, you can see how everything is so interrelated. If I bring up the chart of the USD JPY now, and you shall see on the daily chart, we certainly have a concern with regards to that 115 level being obviously taken out. We have closed a gap. Ever since we've closed this gap here at 112.36, although we did dip as low as 111, we certainly have managed to potentially bounce back here. So again, it's going to be interesting to see how the USD JPY reacts and how the actual Japanese central bank, the BOJ, certainly react to the the movement in the USD JPY. Now, the US dollar side of the equation certainly will be supported due to the fact that retail sales certainly came in stronger than expected. So that's certainly something to take into consideration. And also the export and import price index certainly fell much lower than expected. So again, supporting the dollar side of the equation. Now, it's all about the yen. And yen is all dictated by fear, risk aversion, etc. And obviously the monetary policy in the by the BOJ. Okay, so that's the situation with regards to yen, renminbi. So the yen certainly has a weakness, certainly is weak and remains weak, given the fact that it's broken that 115 level, which was the tolerance level by the BOJ, according to Kathy Leon. Okay, at BK Forex, so 115 was the tolerance level. Now, we have had potential rumours of intervention. Now, if obviously the yen or the USD JPY rallies overnight, then obviously that's risk on, and that will help the US market certainly to move higher as well. Again, Chinese data will dictate the movements overnight, and again that will obviously feed through into the European indices. Now, going over to the Euro USD, given the fact that we have a Draghi speech tomorrow as well. Okay, now that's a major market mover, as we all know. If Mr. Draghi is as dovish as he states he is. Now, we have had two articles over the weekend. Okay, the first one with regards to Mr. Draghi not sounding as dovish as everybody expects him to, and obviously him leaning towards more of a potential rate cut as opposed to a more QE. Okay, so having said that, though, the technical picture on the daily chart, as you can see, we are holding resistance. We've held at the key level at 113.80, and we certainly have put in a bearish engulfing candle. Now, given the fact that you have Mr. Draghi speaking, excuse me, given the fact that you have Mr. Draghi speaking, it's always a safe measure if you do have any potential long positions to certainly offload, and you certainly will not be adding. So therefore, the buying side of the equation will certainly obviously diminish, and you will see potential sell-off in the Euro USD going into Mr. Draghi, given the potential unexpected announcement. And obviously, if the longs are caught off guard, because as you can see, we did have an article over the weekend with regards to potential Euro shorts being cut. If I can go back here and have a look. Ay, caramba, where is that article gone? Okay. Yep, there we go. Okay, so Euro short slashed 24,000 in the current week. Interesting article, to say the least. Okay, so Forex futures, speculatory positions, etc., etc. CFT's commitment trader report, Euro short slashed 24,000 in the current week. So, again, given the fact that the shorts certainly have been taken out, now, again, this makes this trade quite heavy on the long side, and I would certainly, going into Mr. Draghi, I would certainly exercise caution, okay? Especially given the fact that the dollar index itself is looking primed to potentially break out higher. If I bring up the dollar index and I certainly show you and demonstrate to you. Where are we? Okay, so the daily chart, you can see we have a bullish engulfing candle, 60-minute chart. If I bring up the DJFXCM, I think that will be more clear. Bear with me. Okay, I don't actually have that index here for some strange reason. Oh, there we go. Okay, so if I go to the 4-hour chart, you can see that we are potentially breaking out here on the dollar index, looking to potentially move higher. So this is quite important, okay, for the dollar index itself. So again, looking to potentially break out on the dollar index, given the downtrend certainly has broken out, and looking to move higher. So I do think this is quite important. Also, given the fact that the daily chart is obviously holding that 200 MA, so again, that's quite important and certainly is crucial. Okay, so certainly looking for a potential breakout there. Also, I think on the 24-hour dollar chart, given the fact that that's an ETF, if I just bring up the 24-hour chart, should be able to see that more clearly. Here we go. If I go to the 4-hour chart, and you can clearly see that we have this downward sloping contracting wedge type pattern looking for a potential breakout higher. Okay, so again, this is quite important. Okay, if the dollar is moving higher, you are looking at USD, JPY potential move higher, but then you're looking at the euro moving lower, which again does help to support risk to a large extent. So again, it's a conundrum that we'll only find out, obviously, with regards to the reaction overnight to Chinese data. Also, we have GDP out from Japan as well. So again, that's going to influence the yen, and it'll be interesting to see exactly which way we end up, or risk certainly turns towards. Okay, bear in mind the euro as well, the euro situation, potential resistance on the euro, and therefore you would potentially favour equities, especially with regards to the US dollar rally. And not only the US dollar rally, but the US equities certainly moved higher on stronger retail sales. Okay, so now how do we look at the European markets from a technical perspective? Now that's the question. Okay, so from a daily chart on the Euro stocks, as always, Euro stocks, it was an inside bar on Friday. So again, cause for concern. Weekly chart, potential bottoming tail, looking to potentially base out potential support. The going back to the daily again, like I said, it's an inside bar. If we can break out this red candle here, which is the upper high is at 2780, then you are looking to potentially test that 2860 level on the Euro Stocks charts. Okay, so certainly take that into consideration. If we do push higher, then your next resistance zone will be previous resistance equals support at 2970. So they are the two zones. Given the fact that the lower channel of the Euro Stocks is held, we are looking to potentially push higher up to that 2850 zone, and again the next one will be 2970, so certainly take that into consideration. Looking at a 60-minute chart, you can see that we are looking at a expanding wedge type pattern and a potential breakout. Okay, so again, certainly all eyes on the Euro Stocks. You do have this unfilled gap at 2790, which may well be targeted on the back of Mr. Draghi and a potential short squeeze in equities, again led by the potential sell-off in the euro. Okay, 10-minute chart, Euro Stocks certainly is looking very bullish at this juncture, although you do have this diagonal trend line to contend with, so again take that into consideration, folks. Okay, but again that gap certainly looks like a short target, especially if you are in the dovish camp and expecting Mr. Draghi to sound the drums of dovishness. Again, that unfilled gap remains at 2790. If you go break past that, the next level is 2820 on the Euro Stocks chart. So certainly take that into consideration when trading. Now, also looking at the S&P Europe 350, again the weekly chart, again this is a cross-reference for the Euro Stocks. Daily chart, again looking at potentially breaking out, holding that lower channel. If you do break out above here, a bullish golfing candle convincingly, then you are looking at a potential move higher. Bringing up the chart, the German DAX. Let's bring up the chart on the DAX. Where art thou, DAX? Here we go. A weekly chart certainly is holding, held at 200 MA, although it has paced it. It's slight concern. Lower channel of support, again, any thrust higher will be facing fierce resistance at this 9320 zone, which is previous support equals resistance, as we all know, based on technical analysis. Okay, so take that into consideration. Now, we do have another trend line, potential trend line, taking the pivot high from here, just connecting this pivot high across. So again, you will have two diagonal trend lines and one horizontal trend line to contend with. So again, take that into consideration. Jumping over to a 60-minute channel, you've broken out this falling, expanding wedge type pattern, which again is always, according to a lot of technicians, is a bullish pattern. Again, your first level of resistance will be 9020. Given the fact that we did actually close in the futures around that 9000 level, that will already be into resistance. Again, if you break higher, then the next level is 9125, and then this ultimate level here where previous support equals resistance at 9320. Okay, again, that breakout here above this channel is potentially considered a bullish pattern, but again, fundamentals would dictate Chinese data overnight, export, imports, and trade balance, and obviously the GDP number from Japan. Obviously, geopolitics with regards to Russia and Saudi and Turkish army are potentially colluding together to bomb Syria. Again, that's a cause for concern and how the Russians will react. Oil prices certainly rebounded last week, so maybe that was in anticipation of this potential incursion. So again, it certainly remains a concern, and geopolitics, as we all know, can certainly send the stock market lower. And in the fact that you have the renminbi potentially topping out as well versus the dollar, that certainly is a cause for concern with that topping tail. So again, it will be interesting to see how the Asian markets of China reacts overnight. German DAX, like I said, your first level of resistance is that 9020 zone, which is gap fill, and that will be the first cause for concern. And bear in mind, you do have the unfilled gap below at 8750, so this market could certainly shift sentiment in a dime. It could change very, very quickly, so certainly be aware of that. Okay, in terms of the French CAC, let's bring up the chart of the CAC. Okay, again, lower channel support. you're looking for that potential gap fill at our area at 4060, going over to a 60-minute chart. Again, it's still lower lows, lower highs, innocent until proven guilty. But for now, you are targeting that upper zone at 4060. So once you see the CAC into 4060 resistance, certainly beware of any potential long positions. I, for one, if we reach that 4060 zone, we'll certainly be in the bearish camp, provided fundamentals obviously align together. Okay, 10-minute chart, you are into that resistance zone at 4000. Remains a concern. Again, Chinese or Asian markets will certainly dictate. Chinese trade data and obviously Japanese GDP, along with the renminbi, the euro, the yen, because it's one hell of a currency war. Okay, so that's the situation with regards to European indices. Let's bring up the jolly old good FTSE. Okay, so who's a jolly good fella here? The FTSE certainly has rebounded very sharply, very, very impressively. I mean, we had this bear flag, just basically consolidating here, looking to potentially obviously move lower, given the fact that oil prices tested that low. I mean, one of the head fakes really was the price of oil. And again, that was mainly due to the obviously inside information on this potential incursion by Saudi and the Turks. Basically, we bring up a daily chart of oil. Excuse me. You can see that we basically failed to hold that double bottom. We made a new low, and then obviously we pounced higher. Bear with me 1 second while I get something for my sore throat. So one hell of a reversal. Okay, certainly caught a lot of individual traders off guard, and it was very, let's just say, the market makers had a lot of fun there. Okay, so basically a move lower, and then we had a powerful reversal. So very impressive move. Looking at a 60-minute chart, though, it is into resistance now. So from a large extent, it has factored in that potential Saudi Turkey incursion into Syria and the uncertainties and what the reaction of the Russians will be, given the fact that, as we all know, they're all colluding together to a large extent. So it certainly is a war versus Russia versus Iran, and then you have the Turks, and then obviously the Americans on the and the Saudis on the other side. They're all in bed together, aren't they? So again, it's a proxy war, and again, one war that really it certainly favours the Russians and the Iranians, and really favours all OPEC members, really. And it won't be a surprise if nobody attempts to stop it, because the last thing they want now is for world peace to obviously cause the oil prices decline further, which in turn obviously creates more deflation, and then obviously these banks around the world are all in a quagmire. Okay, so it certainly is a concern. I mean, Japanese going negative rates, the risk bank going negative rates, Sweden, and who's next? I mean, ECB obviously negative rates. So it certainly is a situation. I mean, Mrs. Yellen basically talked about potential of negative rates being discussed in 2010, and then it was rejected. So that's not exactly what they want to, and obviously that's causing the banks, squeezing the banks, because of the negative rates, and certainly is not a good business model for the banks, and the banks are suffering to a large extent. Okay, so it's one of those negative feedback loops. Okay, so again, it's a cause for concern. So oil prices obviously into resistance here at this $29-30 level. So again, you are looking at potential risk off for the FTSE 100. If oil is into resistance, the FTSE is into resistance. So for now, you have resistance on the FTSE at this key diagonal trend line, the horizontal line, which is seen at 5712. If you break above that, then the next level is previous resistance equals, or previous support equals resistance, as we all know, is at this key level at 5770. Then you have 57 or 5790, and then obviously ultimate at 5840. Okay, so bear that in mind. Going back to the daily chart on the FTSE, you do have this diagonal, or should we say bearish channel. Okay, so again, you are into that upper channel resistance on the FTSE, and therefore looking to potentially reverse from my perspective, okay, on the daily chart. And that's mainly led by the price of oil. The weekly chart still is lower lows, lower highs, although we have put in a bottoming tail that certainly needs to be respected. But again, it's all about oil. Okay, so 60-minute chart certainly is into resistance. I expect the 10-minute chart to certainly follow suit. So horizontal resistance here at 6712, 6713. Then you got 67 or 5730 and 5750, and then obviously you got 5770. So this zone here is very, very important from my perspective. Okay, this zone here from 5730 odd to the 5760 odd zone, that's a solid resistance level. Okay, starting from obviously 5714, 5713. on the FTSE 100. Certainly a shorting opportunity. Given the fact that the FTSE obviously closed around that 5730 level, I will be very tempted to open up a short position going overnight. Okay. Again, be mindful of the potential volatility from Chinese data and obviously Japanese data too. Okay, I think that's a market wrap in terms of European indices. I'm really apologetic. I have to certainly apologise for making this video very, very lengthy. I try my best, but given the amount of variables I have to take into account, I haven't even started looking at the rest of them, the Aussie and the Kiwi, etc. And this video will be too long. Okay, but from my perspective, European indices, given the fact that the DAX is into gap fill, FTSE is into resistance as well, certainly remains heavy going into a data deluge in Asia, which has a lot of uncertainties. Well, having said that, any sell-off will be checked by the Draghi speech going into tomorrow. If that Draghi speech is hawkish, i.e. not dovish enough, then you will see an en masse sell-off again. So again, take that into consideration. From the way in which I'd look at it is short overnight, then long prior to Draghi. And he will be the recovery catalyst, I think. So that's my game plan for the next in the next 12 hours, okay? Potentially 24 hours, okay? So be sure to visit cfds.com for your trading needs and certainly take advantage of that potential generous bonus to start trading. Goodbye, folks.